Arf, 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 arf. Good morning. I don't know what just dinged on me. I'm going to go over to YouTube. I am live. I'll turn on the Do Not Disturb. Do Not Disturb. Okay. And we're going to do some scans. Morning, Joe. I looked up last night, by the way. What was I just going to say? I literally was just going to say something, and then it just skipped out on my mind. Just, spoiler. Morning, Nevin. We lost everything yesterday. So, today is an even more careful day. The bond rate has gone back up. Let's say we'll go to Seeking Alpha, and we'll go to 10-year. And I gotta do this. Hold on. I'm gonna yank these out. Oh. I'm going to yank those two out. Put them over there. Wah, wah. 10-year. Let's see. I think this is, this is the economic calendar. I mean, you got jobs that came out. Jobless claims were up 10,000. So that's good news. Again, bad news is good news. So we're still in that realm. Here, 1 year up 23.79%. Year to date, up 27%. This is the yield. So as long as that's continuing to go up, you see yesterday, boop. What's that commercial? Whoop. Meta. I mean, look. We're gonna go into after hours. I mean, and it still remains crazy. You're at 287. I don't know. I have to look up why this thing. We're gonna go to 65. We're gonna go to 5 minutes. Look at this. The call starts. I mean, the earnings are released. The call starts. Whoop! 306 down to 289 within 5 minutes. Let's look up Meta. Let's see. Let's see if I can find the exact quote that Mark Zuckerberg said. Yeah. I mean, I still say it's a great buy. Okay, I gotta sneeze. Oh, I hate this. Oh, now it's gone. F you, sneeze. Ugh. Users, engagement, ARPU, ad revenue, segment reporting, reels, business messaging, threads, chatbots. Hey, I gotta go blow my nose. Hold on 1 second. This is an amazing article. Outlook. Yeah, this is enough of an article to copy and paste in there. Copy. And we're just going to go meta article. And I continue to think this is just, if you look at the grade 8, Magnificent 7, whatever you want to say, money's coming out of there. Just money's coming out of the big cap stocks. And it scares me in that are we back in the year 2000? Because if we just go back, we'll go back to the Qs. Because I think they go back to 2000. Let's look at, and I'm going to, okay, yeah, this doesn't include after hours. So we just ran it. We'll go to a yearly. No, it doesn't go. It looks like it started in like 1999, the Qs. Let's look at SPY. Probably goes back. Does SPY go back? Let's say yearly. SPY goes back enough. SPY wasn't greatly. Look, okay, 1999. Remember, 1999. All you had to do in 1999, if you were trading, you know what? Hold on one second. I'm gonna move you over. I forgot to do this real quick. YouTube Studio. And then, oh, come on. I have to update my my computer, and I didn't want to do that before I save. And then we'll go videos and then get shareable link. And wah. Okay. I'm gonna move you back. So what happened in basically in the late 90s was all you had to do during these years was, hey, I got a website. It was nothing more than that. Oh, I got people coming to my website. It was nothing more than that. And then in the year 2000, valuations got crazy. Now, mind you, valuations were up. It's crazy to think that valuations for Apple and stuff like that are at 25 now. Valuations of some of these companies were up near 40 and 50. That was, if you had a website, oh my God. Today you take it for granted, but that was all they did. And in 2000, valuations kind of came to a head. And here you're trading at 140, 155 is the high in 2000. There's 2007, you're back at 157. 2008, you're back at 146. 2009, 113. 2010, 126. So it took you all the way to here, 2013. From the year 2000 to get back to to beating the all-time highs. That could be where we are today. With SPY here, 2021, the high was 479. 2022, the high was 479. 2023, the high is 459. So, and right now, we're at 417. So we could be seeing one of these. I mean, just be aware of that. I'm not. It's about protecting your capital. And if you've got a company that is providing good earnings, HD, Home Depot, I'd say no. You got a housing issue here. Let's see what the algorithm says. No, you don't have confirmation on this. Look, it's below the 9-day. Don't try and time it. Even if you bought here at 290 thing, ooh, I finally have confirmation. Nope, gone out. You're seeing companies report good earnings, and they're still going down. So, I mean, look at Meta last night. Meta just killed it. I'm looking for, let me see if this has it. Because sometimes the free sites will say, ooh, this is when Mark Zuckerberg said this. Let's see. Is that what it is? Ah, that's what it is. That's exactly what it is. I'll put this in my notes. Okay. You know what? Here. This might be a good one. Let's see. Bard. Let's go to Bard. This is how you use AI. Let's see. Last night. You have to train it first. Yes, I have a transcript of Meta's earnings. Here's a summary for the key takeaways. Revenue, net income, expenses, family of apps, Reality Labs. Overall, Meta's earnings results for the third quarter were strong, and the company's outlook for fourth quarter is positive. Boom. After hours price of Meta stock. We're training it. Let's see. Meta is currently trading at, it's not at 300. That's where it closed, I think. 291. 291's down here, so you wouldn't have any confirmation, but it's under 300, I'm telling you. Let's go back to Bard, and let's say, why did Meta... Let's see. Here we go. Boom. I just gave you how to use AI. Here, we'll just copy this. And we're going to put this. Oh, you know what? Maybe I'll just... We're just going to copy this picture. And we're going to put it in there. And then I'm going to go over here, properties, and we're going to say application. Oh, come on. Cancel. Keep properties. Preview. There we go. We'll keep that up there. Well, I don't even need that. You know what? I'll just keep this open. Okay. Here, Medici is warned that the company was seeing weaker. That's it. I mean, that's. Got it. Okay. Wah, wah, wah. Oxy is down. Okay, let's do some scans. And Mark, no, you shouldn't load up on HD. Long story short. No. I mean, here's the thing. We'll look at a long term of Home Depot. Look, you're below the 200-day. If you believe in Home Depot, load up on it. I just don't think that, here's the pre-pandemic price, $244. Yes, we're almost 4 years away from the pandemic. Doesn't, oh God, this damn thing. Look at my thumb. My thumb is swollen. Oh, I can't get it in front of the camera. There. I've got an ingrown fingernail. And it is swollen. It looks bad. But no. HD, no. Mark, no way. I would be looking at probably 260 down in, let's look for the support. I would probably be looking at, if you want a trend line, you know what, we're not going to do that. Let's see. Where is there's my channel. We're going to look here. So I think that's probably the channel that I would say 270 to 252. That's where I would look. But let's do some scans. Microsoft. Boom, boom. Target. Wah, wah, wah. Target, the forgotten child. Covered call, energy names. There's probably nothing in energy because energy was down. Levered ETFs. This is all going to be on the downside. Nothing on there. Low cost Vanguard. Let's see. Spider sectors. XLU. Interesting. Comcast announced slower, weaker than expected. What is going on with this one? Wow, Rivian. K-Web we talked about. Airbnb from yesterday. Got CCL. Kind of just fluctuating. PDD, we talked about that one. Royal Caribbean. Oh, I just don't feel comfortable about recommending a lot right now. The Dow, Microsoft is the only one. Let's look at NASDAQ. There's going to be a couple in NASDAQ. Yeah. Let's look at S&P. And then I'm just going to start the podcast. Wah, 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 wah. Southern Company, I mean, it's been a good bounce off of what, 62 to 64 to $4 on a utility, and their earnings are coming up. I mean, that's what's going to kill it. Or the earnings, if they just, say, hey, we've got higher cost. I mean, Duke Energy, Bristol Myers got a bump, but nothing huge. I think they're even down in pre-market. Okay. We'll go back to the strategy tester. And I hope I'm still live. I think I'm still live. I'm going to go to SPY. Okay. I've got enough to talk about. Okay. Let's go over. Let's start this puppy. Okay. Good morning. It is Thursday, October 26th. Welcome to the day after disaster. Again, we are still in good. Good news is bad news, and bad news is good news. So a couple of things. First thing is I will take you through, by the way, in this episode, I will take you through how to look at Meta's earnings using artificial intelligence. That is, we used Bard and I just did it live. I will show you exactly what I did. How to look at things, say, hey, why is the stock down? You have to train AI, so being a prompt specialist is good. And the first thing I want to show you is I did a short. I finally did a short, and it's a horrible short. But here's the it was at an all-time high, and it's 159. Do you think this one deserves that much of a multiple? I'm gonna try and listen. Yeah, here's the short. You will find a like a party-sized bag of peanut M&Ms in my house at all time. We played that yesterday, but what I want you guys to do is, if you find or you hear on this podcast something that might make a good short, because I'm an angry old dude, and so when I start yelling and stuff, if something's going to make a good short, yell at me, and then I'll throw it into an editor, and I'll edit it out and do a short on it. We have to. Again, Daddy's trying to make some money, so I got to get some positive stuff in here, and I got to just start doing shorts, since that's all that YouTube promotes is shorts. They obviously don't promote videos and stuff, but let's first take a look at SPY. And we're first going to take a look at SPY, and then I'll throw you up the 10-year. But we have no confirmation on SPY. Remember how I said you have to be careful buying stocks, and you want to buy good stocks. And we'll go over Meta yesterday. We'll go over Google yesterday, Google's reaction. We'll go over everything. But remember, as long as you are not in an upward trend on SPY, when you play earnings, you have to be extra careful. And you want to make sure that you buy companies, if you're going to play against earnings, that you can dollar cost average and will absolutely go up. There's some danger in this, but understand, if you bought Meta at 310 yesterday or 311, and all of a sudden right now you're sitting at 291 and you're like, oh crap, what did I do? Maybe you bought one share, maybe you bought two shares, maybe you bought 10,000 shares and you're missing out on, hundreds of thousands of dollars. Are you crapping your pants? You probably shouldn't be. It's not a great feeling to lose, but if that investment was something of a trade, you absolutely should have been stopped out before you lost all that money. If that thing is a long-term investment, you shouldn't worry whatsoever. You should be able to dollar cost average. But understand, with no confirmation, be careful. Adding long-term is a solid plan. It doesn't feel good, even if you're down, the day after and stuff. But understand, you shouldn't be worried about it. Companies with good earnings, with good management, with good products, and good outlooks, these are things that will be fine. They will come back. And in no way is Meta close to its all-time high. So understand that the reason we went down yesterday, the 10-year bond rate. 10-year bond rate went up yesterday, and it's continuing to go up. Right now, you're at 4.93. You're at 0.43. The bond rate wants to be above 5. So while we saw that dip, and you can see this, look at this one-day chart. We saw a dip later in, and we saw the market come up later in the day. But you continually went high, and you kind of hovered around that 5% mark. Here's the 5-day. And take a look at the 5-day history of this. This was why we were doing so well the first couple of days of the week, because we were down here at about 4.58. You look at the 1 month, you're up 8% in 1 month. So understand, this is what's driving the market right now. The 10-year is at 4.93. The 2-year is at 5.09. That inversion is coming closer. Remember, I think it was last year in March, the 10-year was actually lower than the 2-year. That's called an inversion. And when that happened, we started to freak out because there was a pending recession. You don't know when you're in a recession. I think it's 6 months afterwards you actually find out that you're in a recession. So understand, those are the two things that are going on in the market. SPY is going down. The bond rates are going up. If we don't have buyers of the bonds, the yields continue to go up. So until buyers show up on these bonds, when you get, Jamie Dimon is saying it could go to 7%. There's smarter people in the room than me. So understand that. Now let's talk about earnings. And I will get to Meta earnings. Mattel reported they killed it. It was up 2%. Let's see. Mattel is up at $20.14. I'm sorry, it's down. So good earnings, again with Mattel. Good earnings caused them to crash. They closed yesterday at $20.14. They're down at $17. I'm going to close these up real quick so I can see some of this stuff. We're going to get rid of Savvy Trader there. Yeah, there we go. Okay. It's down 12%, Mattel is. On good earnings. Let's go to Bard. Let's do this real time. Let's see why Mattel is down. We'll go to Bard. And Bard is my favorite AI just because it connects live to the internet. Do you have a transcript of Mattel earnings yesterday? Let's see. So let's look at this. Yes, here's Mattel's earnings. Operating transcript. Okay. We can skip the response. We'll skip the response. So he's got that. What price is Mattel stock at right now? Let's look at that. It should be $17.66. It's $18.45. So it's a little delayed. Sometimes it's a little. Why is Mattel stock down after earnings yesterday. And it will go out there, will scour the internet, and it will find you reasons why it's down. Hopefully. Mattel stock is down after earnings for a few reasons. The company cut its full year guidance. Boom. Barbie sales declined in the second quarter. Boom. The macro environment is challenging. Mattel's CEO said that the macro environment was more challenging than anticipated. This is likely due to a number of factors, including inflation, rising interest rates, and the war in Ukraine. Overall, the market is disappointed with Mattel's earnings, and it lowered guidance. The company is facing some challenges, but it's on track to deliver a profit in 2023. Investors will be will be watching to see how Mattel performs in the second half of the year. Done. I mean, do I want to hold a stock where they have no confirmation? Their earnings are down. Look at 10 cents per share, and it jumped to $1.08 per share. That was really good news. But what happens? Good news turns to bad news. The stock is down 17 or 12%. So you want to be careful of that. Do I want to hold Mattel? Probably not. IBM, they reported earnings. Good earnings. IBM beat. They're still up 2%. They're holding 2%. This is a company that is not crazy expensive. It is perfectly fine. ServiceNow, they beat by a large margin. They went up 8% right afterwards. They're up 5% right now. It took a while to digest. The after hours one in this one was crazy. But you can read all about ServiceNow. They reported, you can see $2.37, $2.92. And I think they had somewhere in the neighborhood of a 20% increase in their customer base that were over $1 million. It was great. This was a great quarter for ServiceNow. Even though the douchebag has, sunglasses on all the time. I mean, he's got these shaded glasses. I just don't trust the guy. I don't trust the guy. But let's get to the big boy of the day. It was Meta. Meta beat, and the initial reaction was down. If we just take a look, I'm going to go, rather than the 4 hour, you can see it got us out right before earnings, and we can look at display extended hours for this one, and I'm going to go to a 5-minute chart. Let's go to a 5-minute chart because the action was crazy. And you can see, here's the earnings. We headed into earnings with no confirmation. There was no confirmation on a 5-minute chart at all yesterday for this stock. Nothing. So there shouldn't have been anything that triggered you to buy other than, oh my God, I want this before earnings. FOMO is real. Understand, FOMO is a real thing with traders. Just don't do it. Tell yourself, no, I don't want to do it. I'll wait until after earnings. And then boom, you had confirmation after earnings. And so if you bought here at 309, this is why I'm saying if you bought Meta at 309 because you had confirmation after earnings, and then all of a sudden you get down here and oh my God, it's at 285, 270, somewhere in that neighborhood. Are you worried? Well, you shouldn't be. But here, this is a great example of hype and how it went crazy. Because Meta, the initial reaction was down. Here's my notes. It went up by a lot afterwards, lowering range of they lowered the range of their expenses in 2024. And Reality Labs is losing less. They expect total revenue this year to be slightly down. That was essentially this part. And then they got on the call. And so let's go over to Bard. We'll go to Bard on this one. I'm going to close this Bard out. We'll go to Bard. I said, do you have a transcript of Meta earnings last night? Yes, I have a transcript. Here's the summary. Revenue, net income, expenses, family of apps, Reality Labs. Meta also provided guidance for the fourth quarter. The company expects revenue to be in the range of 36 to 40 billion, representing a growth of 10 to 19% year over year. Overall, Meta's earnings for the third quarter were strong, and the company's outlook for the fourth quarter is positive. That alone would tell me, hey, I'm going to invest in it. So I asked it, do you know the after-hours price of Meta stock? The after-hours price is $300. Well, it's not. It's like $290. So there's a hallucination. That's not correct. Meta stock has been trading higher in after-hours following the company's strong earnings. It has not. It has not. That's a total hallucination. So you have to understand, sometimes this was just training it. So then I asked, why did Meta stock drop so much after the earnings call? And again, all of this AI is free. It's just Bard. Meta stock dropped, weaker advertising demand. This is the quote, and I have it in here. We are very subject to volatility in the macro landscape. Chief Financial Officer Susan Lee said in a call with investors to discuss third quarter results. The revenue outlook is uncertain for 2024. That's weaker advertising demand, rising costs. The costs are going crazy, specifically in Reality Labs, which is their AI division, which is developing the metaverse. Investors are concerned the company's investment in the metaverse are not paying off. Yes, they increased the spend in Reality Labs. That's just horrible for the stock. Slowing revenue growth. Meta's revenue growth is slowing. This is due to a combination of factors, including weaker advertising demand and the company's pivot to the metaverse. Yes. In addition to the above, Meta stock has also been under pressure in recent months due to a number of factors: increased competition from TikTok, privacy changes from Apple, regulatory scrutiny from big tech companies. So this is 101, how you use AI to get an idea of what happened, so you don't have to listen to a 4-hour conference call and listen, try and summarize it yourself. Use Bard. I love Bard. And let's talk about Google stock. If you have Bard like that, let's talk about Google stock, because Google stock yesterday, just an absolute nightmare. It was down like 10%, something like that. It's at 124. Should you buy it? I would buy it. It's under the 200-day. In fact, I'll probably add more to my position. I like it here. I don't think that it... Look at the last time it was at 200-day, at 93. And you guys were touting me. I got a bunch of messages from people. Oh my God, you're a genius. Thank you so much for telling us to buy it under 100. It's under the 200-day and it's at 126. Now, is that expensive for Google in the long term? Nah, it's not bad. I mean, it's not great. Google's still expensive. Look at that. On the weekly, you're still up. The all-time highs are about 150. If we go to FinViz and we look at Google, you'll see that the multiple's still big. It's not small. Forward PE is 18. That's right in line with a growth stock with the S&P. If we're heading into a recession and Google's going to lose money on their search, you don't want the PE at 18. You want it probably more at like 15. Year to date, you're up 42%. So the average per target price is 152. The 52-week high, 142. So from here to the 52-week high, you're 11% down. That's not crazy. That's probably in line with most stocks. So it's not nuts. It's more about, hey, am I going long term or am I going short term? If you're going long term, probably hold off for a little bit just to see where the market is. You can see the 50-day on the long term still positive. The 200-day is still positive. You're not down even close to the 200-day. Could you get down to the 200-day? Absolutely. If this market continues downward and the 10-year bond continues up towards 6%, you could get down to this 200-day. 5-10 years from now, are you going to remember that you paid 120, 126 for this stock instead of paying, 108? No, not if you continually add to the stock. So understand there are ways to do this. Just look at this stuff. The earnings update on, I did, by the way, on Meta, there's a really good earnings update here. This is a great breakdown fundamentally. This one, and I'll include the stock market nerds fundamentals. The way to look at this stock is right here. This is it, ad impressions versus ad dynamic. And this is why the stock is continually a buy. I don't think that it's a sell. I think Google's a buy. I think Meta's a buy. Now, understand what's happening with a lot of these big tech stocks is that the people are coming out of them. They don't want high multiple stocps, and so those are the big tech stocks. One that I got asked about on YouTube yesterday, and I apologize. I don't think I went over it, was ARM. This was an IPO. So you had an IPO right over here, and I think it opened at about 60. It opened, it says 56, but I think it came out at like 42, or it might have been 50 where it was initially offered. I forget. I'm not a fan of IPOs. This is the reason I'm not a fan of IPOs, because if you bought on this day and you say you bought at the high, even at the low at 55, you're still down. You're down 10%. Understand that, markets need time to digest things. And an IPO is probably not the best time to buy, even though in years past, oh my God, it's an IPO, it's a tech company, we got to buy it. Well, no, you don't. So you could make money trading this, and you could make money trading it after a couple of days shake out, and you can see the price action. Now, today, this one's opening up at $50. The algorithm has you buy in here at $52.11. I'm a fan of ARM. I'm just not a fan of their multiples. Let's see if we take a look. They are making money. I don't know if, FinViz they haven't reported a quarter. So there's no, FinViz doesn't have a lot of information. If we go over to, let's look at ARM in Seeking Alpha, because we can look at the quant rating, the Wall Street ratings, all of that stuff. So quant, it's not covered because it's just too new. Wall Street has it as a buy at 4.0. Seeking Alpha analysts, they're usually really bullish. They have it as a sell. And there's a IPO lesson right here. I'll include this one. You know what? I'm going to include this article because it's probably a good one to read for people that invested in ARM. I don't know enough about the architecture of chips to say this is one that you actually want to buy. So from a price action standpoint, I'd still wait. You've got some moving averages. You just got your 50-day on the 4-hour here. You don't even have a 200-day. So I would stay away from that one. Oracle bought more Oxy this week. If we go over to FinViz and we look, Occidental Petroleum, I think it's going to be on here. Let's see, insider sales and buys. Here we go, October 23rd. Bought $105 million worth at 62. Then on October 24th, bought $74 million more at 62. And then, just October 25th, yesterday, they bought $65 million worth more. So if you think that Warren Buffett thinks that this is a mistake, look at how much money he's put into this over the past year. I mean, he has bought all the way from 60 down to 57 and 63. Yeah, he's put in so much money in this. They own like 25% of this. So understand, it's they hold a 25.8% stake. The average target price is $70, and he's buying at 62. It's an oil play. This is 100% an oil play. So take a look at that one. One that I wanted to take a look at because it's been beaten down, and it is one of my favorites. I don't own this one, but I want to put this one in the core portfolio is Oracle. And I like this gap to be filled. Remember, the earnings gap down, we haven't gotten there. You got this at 105, you got confirmation, and you got the buy-in. It got you out with a 3% loss way over here. Your ex-dividend date has been paid. I like this gap to be filled. And you can see it started to get filled. I like this gap to be filled all the way up to 126. This is a solid company. Uber has hired them to take them from on-premise to cloud-based storage. I like this company. If you're going to get AI, Oracle will actually benefit from AI. It's not a crazy multiple. If we go and look at Oracle, this is a stock that in the 60s, I was saying, absolutely should buy. Did I buy? No, my ass doesn't buy. You can see the double top up here. So your top is 127. That's your ceiling. Your 52-week high, 127. Your target price, average target price, 129. They are right in line. You're trading at 101. So while you wait for it, you get a 1.43% dividend. Year to date, it's up 24%. The multiple, the forward PE, 16. You're just in line. Well, this company's growing. The PE right now is 30, but the expected forward PE is 16. So if they continue to grow at the pace that they're currently growing, now you do have some questions with Google's cloud and everything like that. This leads us into tonight's earnings because Amazon reports tonight. And cloud is going to be on the horizon. I did an article yesterday of 3 reasons that Amazon will beat. That's what this one is. I listen, you have no confirmation. Am I adding to this position? No. Am I selling this position? No. You're under the 200-day. From a long-term perspective, take a look at how close you are to this 200-day on the long term. It's been used right here in 2022 as resistance. Got over it, couldn't hold it. Here in 2023, same time frame in September, got over it, couldn't hold it. Are we heading into this? If you go back down to 85 on Amazon, load up. I mean, you want to talk about backing up that Brinks truck? Where's that siren in the back of me? Whoop, whoop, whoop. You know what that is? That's the Brinks truck backing up to load up in on this one. It's $170 price target. That was just made back in it was probably around here where it still had confirmation. Doesn't have confirmation. In this time where the 10-year is going up, you want to be very careful about what capital you deploy. But you also want to be careful not to get rid of. You can't be too scared and be frightened out of this stuff just because the market is going down. If you need the money to pay your rent, it shouldn't be in stocks. If you need the money to pay your car payment, it shouldn't be in stocks. Not when you can get 5% from a savings account. You shouldn't be YOLOing any money that you need. So understand this is investments. And should you be pulling out in your retirement account? Well, the question that I would have is, are you disciplined enough to get back in before that next 10% move? Because if this one, remember, Google said, hey, our cloud is going down, our cloud spend. Microsoft said our cloud spend is going up. So if Google was going down, Microsoft is going up. The question is, did Amazon, who is the number one cloud provider, did they go down? Did everything go over to Microsoft with the ChatGPT, with their OpenAI investment? I don't think so. I think Amazon put out, if you remember, it was, I think, a month or so ago, they said, hey, if you come over to our cloud, we have AI engineers who, as part of your cloud service, we will deploy our own engineers at our cost to help you get AI on your data servers. So I think Amazon is absolutely doing it right. And here's a good example. Amazon yesterday released a beta of their Ads Gen AI. Essentially, and I won't play the voice on this. This is Andy Jassy. This is who. Oh, and I do need to follow him. This is the CEO of Amazon. And this is a first look at their Ads Gen AI capability in beta right now. All sellers, brands need to do is upload a product photo and a description to quickly create unique lifestyles. Let me mute this. I don't need that music on there. You don't need the music to say it. Oh, come on, mute. Will you? There you go. So you upload a photo of the toaster. It generates, it's just a photo of a freaking toaster. It puts the toaster in a kitchen. You can use that as product images. There's a pressure cooker. Put it in a kitchen. Boom. You don't have to hire photographers to take pictures. You can just upload a freaking photo. Take it with your iPhone. And you can upload it. And look, Thanksgiving freaking dinner. You don't think that Amazon is going to say, hey, here's what we're going to do. Load a picture up. We will take care of the description. We will take care of the photos. We will take care of all the advertising to optimize your listing. This is what Amazon will do. Look at Prime Day. So I'm a big believer in Amazon. I think they are still leading the charge in this. I just don't think that right now with that stock price on the short term, if you're looking to play this for an earnings bump, it's probably best to just wait to see how the price action works. Right now, you don't have confirmation. You are well down below that. You are down 0.4% right now today. So, but their earnings come out afterwards. So I just want to make sure, listen, this episode has been AI focused. It has been tech focused. I'm a tech investor, blah, blah, blah. Just understand that I'm a long-term believer in this. Google, with it down so much yesterday, it's down another 1% at 125. I will add that when it gets confirmation. I don't mind adding, good companies that don't have confirmation. But right now, the RSI is at 25, and it's still going down. I like the VWAP here at about 122. Am I going to wait for it? Probably not. If it gets even close to 122, I'll probably add to it. But I'm not trimming it. I'm definitely not trimming it. I'm adding to this one. I just don't think that the cloud business is that hurt. I think overall we're seeing a weaker consumer. I think we're seeing rates higher for longer. Google has enough cash that they don't worry about rates. So Apple has enough cash that they're not worried about rates. Jackson, social request. Jackson from Instagram. Morning, Gary. I've got a trade I would love to take a look at. Company is Planet Fitness. PLNT. Planet Fitness. It's a renewed upward trend, and I think it's going to fill the gap at 64. They have earnings coming up and may announce partnership or a launch of GLP-1 program, Lifetime Fitness. Recently did this. Apparently, these drugs require a lot of exercise so you don't lose muscle mass when you're losing weight. Anyway, I hope you're well. Here's the issue. And this GLP-1 stuff, this is Wegovy. These are these weight loss drugs. My First Millions has a great podcast with Scott Galloway. And towards the end of the podcast, he talks about, he thinks GLP-1, which is the weight loss drugs, that's just the generic thing. These drugs have been around for quite a while. They've treated, I think, liver or kidney disease, something like that. So they have been around for quite a while. They just found out that they actually inhibit your desire to eat. So it's a mood changer, if you will, for people who have diabetes and other weight diseases. I think it's a good thing for society. I don't think it's a good thing for investment purposes. He, along with myself, thinks that this is the magic pill that is going to actually outpace AI in our world. It is a drug that basically, inhibits you from eating. There are side effects, long-term side effects. They've studied these things. They're not huge. You do get sick if you overeat. It's a 2-year process to try and get the actual dosage. You have to continually increase your dosage. These are designer drugs right now costing between $500 and $1,000 a month, and insurance is only covering a portion of that. Sometimes it's a copay, depends on your thing. But these companies will make a lot. Weight loss companies. When we talked about Weight Watchers getting into that they just bought a license to actually do drugs. So I guess Lifetime Fitness may have bought into something like that too. Planet Fitness, I'm not a fan of the gym, and I'm not a fan of the long-term trend on this stock. You can take a look. Here is COVID when the world shut down, and pre-COVID the stock was 87. During COVID, when nobody could go anywhere, that's where the stock was trading, right where it is now, at about 54. Let's look at some of the fundamentals on PLNT here. I agree that I think that gap probably needs to be filled. The PE right now is 36. The forward PE is 20. I mean, is this doing more than Google? Google's at 18 on the forward PE. They're down 30% year to date. Short interest is only 5.39, so you won't have a short squeeze. Average target price is 64. You're trading at 54. The 52-week high is 85. Most recently, October 16th, it looks like Exane BNP Paribas, they upgraded and the stock price is at 45. So they upgraded it, but their stock price is only 45. I think you could probably do better with the actual weight loss drugs. Now, it is true. Listen to that My First Millions podcast. I listened to it. I thought it was super interesting. Right now, I think you might be in a good trade. I don't think, Jackson, this is a long-term, oh my God, I'm going to hold this one. I think, you do have confirmation. If you bought at 46, kudos. I do think that gap up here to 60, I see the gap at 60. And it was on a day, I don't know why, but look up news on September 15th to see if you can find the news. But the MACD is super high, and the RSI is at 59. Do I think it continues up? It looks like it might start. If you get to 56, I'd probably sell. I mean, on this one, I would trade it on tight range. Long term, it just doesn't have the mojo that I think it needs. Alex from Spotify says, "Hey, give me CVS." He called me the dividend hunter. Let's look at CVS. I mean, here's the thing: CVS is losing money on their receipts alone. Have you looked at the receipts that come out of CVS if you want it printed? This is a failing business model. There is nothing more annoying, by the way, to me than going to like a CVS pharmacy or a Walgreens pharmacy or anything. You walk up there and the $5 an hour tech kind of, looks at you and goes, you say, "What's your birthday?" And you say, "Yeah, August 10th, 1970. And boom, "Oh, you're here for the gonorrhea." Yeah, they scream it out. "Oh, chlamydia medication, aisle 1. Yeah, I'm not a big believer in CVS. Walgreens has been even more of a nightmare. I think these guys took off during COVID. I think you needed to go in there. I think this is part of the COVID hangover. You can see the death cross right here on the weekly. September 18th, you are capitulating. The Bollinger Bands are kind of cinching up. Your earnings are coming up. It looks like soon. Let me run the 4-hour. The earnings are coming up on October 31st, Halloween. Probably not a good omen. You don't have any confirmation. If we go over to FinViz and we look at CVS, let's take a look. And I'll look at Seeking Alpha for Planet Fitness too. Your forward PE is only 7, 3.48% dividend. It's a good dividend. If you want to find dividends, I mean, use the screener on FinViz. They have a dividend screener. I think I have a dividend screener on here. But you got a multiple bottom here at 66. It's trading at 68. That's probably a decent support. The PE is 29. So they're forward. Either they're going to have to bring down their forward earnings, or they're going to grow like unbelievably. I just can't see it growing unbelievably. The average target price is 90. Most recent upgrade is September. 2 upgrades around the $80 price point. I just, from a long-term standpoint, I just don't see the attraction of this. A 3% dividend when you can get 5% in a bond fund, and you don't lose your capital in a bond. I'd probably look at that one. And this is the problem: is if you're going up to 7% on bonds, why are you looking at a 3% a dividend? You can always sell those bonds for, either the price that you paid or even downward. If you go from 7%, say you buy a 7% bond right now, and all of a sudden the Fed decides, you know what, we're going to bring bond rates down, and you've got a 7% bond for the next 20, 30 years. What does that bond price do? Bond price goes up because people will be wanting to buy that 7% bond. The reason bond rates are going up right now is because the U.S. government probably can't pay their debts without issuing more debt. And at some point, we just become too leveraged on debt. That's why the deficit's so dangerous. But for me, I'm not a huge dividend. If you want dividends, and Alex, I don't think you're 90 years old in your picture. The reason to hunt dividends is not necessarily, oh my God, I'm going to grow. The reason to hunt dividends is actual income. So say you're an 80-year-old, or let's move it back a little towards, Gary's kind of age. Say you're 65. 65, you leave your job, but you've got a retirement portfolio of $1 million. And you want to, you have to live off that $1 million. Well, what do you want to do? You don't necessarily, at 65, you don't want to go after huge growth. That you don't want to turn that $1 million into $4 million in the next 2 years. You want to take that $1 million and you want to protect your asset value, but you also want to create income in order to live off of. So say you're in an IRA, not a Roth, you're in an IRA. Any money that you get paid in a dividend goes right back into that IRA, so it doesn't get taxed on it. But when you take the money out, you actually get taxed on it. But if you're creating 4 and 5% on the $1 million, So 4 and 5% on, 5% on $1 million bucks, it's $50,000. So you have $50,000 that you can live on. And if you just bought a bond, it's $50,000 that you can live on without pulling out your capital. If you bought $1 million in CVS and you have a 3.48% dividend, you're getting $34,000. Okay. But you may have bought at 90 and then all of a sudden you're at 60. So that 3.4%, it's not getting you $34,000 anymore because your actual 3.4% yield is not on 98 anymore. It's on 67. So understand, as that comes down, you have to protect your capital. And right now, CVS isn't protecting your capital. And that's why I'm not a fan of REITs. REITs, for me, have always come down in the asset value. And they come down faster than what they pay out. So again, if you're looking at income and you're in your 80s and your portfolio isn't going to go to zero, but you want money to live off of, you can do a 15% REIT and be perfectly happy because you have income. But you have to understand that just because somebody pays a 3.48% dividend yield, if that actual asset goes down that far, you're not doing yourself any favors. And I think CVS is one like that. Let's go over and let's look at CVS in the quant ratings in Seeking Alpha. CVS in the rating summary, Seeking Alpha analyst buy at 4.06, Wall Street buy 4.38, quant hold 3.3. I trust the quant. I think those buys, the buys are just based on the forward valuation that they're going to bring in more money. I just think that, listen, I don't like going into CVS. I don't like going into Walgreens. Remember, rule number one for me for stocks, well, rule number one is don't trust a douche on the internet. Rule number two is don't listen to Jim Cramer on anything. Always do the inverse. And rule number three is buy what you know and buy what you like. I don't like CVS. I always get a creepy feeling in CVS's. Let's look at Planet Fitness, PLNT. Let's look at what they say on this one. PLNT, rating summary, Seeking Analyst, hold 3. Wall Street buy at 4.21. Quant hold at 2.84. Jackson, that's, if you want access to any of these articles, let me know, or sign up for Seeking Alpha. But that's why I like, okay, let's talk about some scans. Microsoft. I mean, is it any shock that Microsoft got a cross up and a buy in the algorithm? Let's see if it's actually got confirmation. You do have confirmation. You bought here at 316. You got more confirmation after earnings. You created a gap between 332 and 335. I think you come back down to 332. I think this market's just too weak. Right now you're at 336. So that gap, I think, down to 332 gets filled. Doesn't mean if you're looking for a long-term buy, don't buy it, because this gap up here at 349 almost got filled all the way up to 350. I just think that, you're in a special time and you need to be careful. Target, we pulled Target out of the core portfolio. I still own it. Why? I have no idea. 110.39. Does that mean I'm loading up? No, the RSI's at 53 in no man's land. The MACD's right on the oscillator. I don't trust this. Absolutely don't trust this stock. I'm not adding to it. I'm looking to trim on pops. I'm looking to completely get out on pops. I think my average purchase price is like 111, but that's from like 4 years ago. XLU. We talked about XLU being an opportunity, a few weeks ago when it was down here. And I said, hey, at this 57 mark, it makes sense. Well, where'd you go to? You're at 59. So it got you out with a 0.61% gain. You're at 59. Now you're trading at 60. This one's just too beaten down. The problem with utilities, and the Southern Company came up, Duke Company. If you have TrendSpider, go in and you can scan Duke Energy and you can scan all that stuff. This is the range that I said on the weekly, and you got 35% to get back to the high of that range. So I like that one. I like this, XLU to try and gain some. Just understand, what's his name? Walter, who sits in his chair with his blanket. The dude who likes, Walter and Alex. Alex is the 20-something who's sitting there talking to Walter, and Walter saying buy dividend stocks. That's what utilities are. Utilities are dividend stocks. And they typically hold their value very well, but they pay you 3 to 5% dividends. And the reason they pay you 3 to 5% dividends is because they can charge bozos like us who are homeowners more money, and then they donate to their political client. And the political guys say, yeah, you can raise your prices. It's controlled income, because it's a commodity. So XLU is one. One that came up, and it might be done dropping, is Rivian. I know I said Rivian is a $30 stock and you should absolutely get it. I said at 19, it's a good buy. Well, it's at $16.40 now. You don't have confirmation. There's no confirmation. Even at 19.20, I said I think it's a good buy because I think it's a $30 stock. I think this one's just coming. They're losing $30,000 per car. This is absolutely a trade. It has broken down below this support. So old support, this says old resistance, which is right here. It resisted a few times back before. Old resistance turns into new support. I said this support at 17.12. It's at 16.46. Old support turns into new resistance. So understand your cap on the top is probably less right now. You have to wait for the turnaround. You have to wait until we have something in SPY, something in the markets that says we're going up. We need a catalyst. So there you have it. If you want anything from the daily stock pick, I emailed TrendSpider. I will have a $250 off on TrendSpider probably later this week. But if you need anything from the podcast, Linktree, linktr.ee/daily stock pick. You got all the socials up here. You got TrendSpider. If you want Seeking Alpha, I love Seeking Alpha, $50 off. It's $189 a year. I absolutely think it's worth it. Webull, if you don't have a broker that you like, transfer your shit over to Webull. Webull is great. They give you free stocks. If you transfer, they even give you money for that. I have $1,000 in Webull at the beginning of the year. That $1,000 turned into like $2,500 since then, because Apple is my largest holding in this. It's at $23.51. Click on this link and you'll get free stocks. The daily stock pick newsletter. That is a free newsletter. Every day I send out the newsletter with all the notes and charts that I go over in the podcast. Sign up here, dailystockpick.substack.com. Next one, if you are paying more than $25 a month for your phone service, Visible is your phone service that you should get. They have two plans, $25 and $35. $25 plan is what I'm on. I use it, hotspot. I mean, it's unlimited. I love it. The only difference is premium data gets you faster speeds, a little more allocation of if you're streaming Netflix, in the park, 50 times a month. Yeah, get the $35. If you're just using it as a mobile phone, you do podcasts, you use GPS and stuff, the $25. I tell you what, try the $25. If you don't like it, try the $35. The first month, if you use this link, it gets you $20 off your first month. So you can try even the $35 one. Your first month's $15, but on the $25, your first month is $5. If you want a Tesla, use this link. This link gets you $500 off, 3 months of full self-driving. This is for AT&T fiber at your home. This is what I use. I have gig service at my house. I think it's like $60 or something. Plus I get HBO. I'm locked in on a really, really good service because I locked in early. I got their service really early. But if you want it, I have the 1 gig service. I like this one. Savvy Trader. If you want to follow me on Savvy Trader, I've got 2 portfolios. I've got the trading portfolio, which I typically put some trades in there. And then I've got the core portfolio. And both are down. I mean, there's a lot that I follow. My membership's ETF profit producing portfolio, growth stocks covered and covered call portfolio. You can see these guys are down significantly more. This dude at 930%. Understand this is paper trading. So these guys might not be trading exactly what they say. The ones that I follow, Stock Market Nerds, Jordan's, and Trader Nate, 2 portfolios. But those guys I know are actually putting their money where their mouth is. I am putting my money where my mouth is. The core portfolio, I think it has 35 positions. I think I'm in 32 or 33 of them. The trading portfolio, obviously, I have all of those positions because I do trade those. If you have any questions, hit me up. And if you don't have socials, my email's right here. I got a couple of emails yesterday. So, okay, I'll be back tomorrow. Take care. See you. Bye. John, Amazon. Hopefully I went over Amazon for you. I'm just reading your comment. Yes, 11%. I heard that too. I don't know how to do volatility and swing and options. If it goes back to 100, didn't I? I think that was the one where I said, if it goes back to 100, back up that Brinks truck. Do you hear that siren behind me? That's the Brinks truck. I just think Amazon's too good of a company to be down at these levels. Now, could I be wrong? Could, for some reason, Amazon on their call say, hey, we're seeing a slowdown in not consumer spending, because they don't really care about consumer spending. Prime Day killed it. So they're going to come out with Prime Day absolutely killed it. They're also going to come out. Remember, and this was for weeks, John, even months. I said Amazon had a cost problem, not a demand problem. They had a cost problem. And so they wound up addressing their cost problem. They now continue to have a cost problem. AI is costly. Servers are costly. AWS is costly to run. Still making bank. That's what makes this company money. So what you have to worry about is, did they spend more in order to bulk up their AI stuff? They have been on a spending spree. So I'm just not sure where they're spending. Brian, let's make some money. Waste management. Waste management is one of, it's a solid company. I think they did run up though. Yeah, they did run up. I think it's been beaten down enough. What's up, Brandon? What's up? Where do I buy bonds from? I go to Fidelity. I don't buy from the Treasury. I buy secondhand bonds. You do pay a little bit more, slightly. But when I go to Fidelity and I go to fixed income bonds right here, like for this one, if I wanted to buy the 10-year right now at 4.95, the sweet spot for me would be 3-year at 4.98, because, I'll take a 5% for 3 years. But I'm getting, I think, a 7-day yield of 5.2% on the one that I have. But you just go here, U.S. Treasury. You can buy zero coupons too, 10-year at 5.12. But then I log in, and there's in Fidelity. There's a thing that has yield worst case, I think. Something. Essentially, it will tell you, hey, worst case scenario over the next 10 years, this is your annual APR. So if you just hold the bond, this is the annual APR of what you get on your investment. Even if the bond actually goes down, this is the worst case scenario. Yeah, Christian, I'm not a fan either. And I hope Alex gets that, because he looks very young in his photo on Spotify. And I don't like young people getting into dividend traps. Dividend aristocrats are great to have as part of your portfolio. But when you're young, take a chance. Take some opportunities. Don't put your portfolio into dividends when you're young. When you get into your 40s, expand into dividends. That's, thing I've always. Algo's got you out of Palantir? Let me see. Oh, it does. Yeah, but that's a nice 5% gain. Let's see. The way the algo works is that MACD is going to have to cross up, and it doesn't look like it's crossing up anytime soon, but it's completely oversold. By November 1st, will we have a solid enough bond market? I don't know. Palantir's a big one for next week. Interesting insight, Brandon. I like that. So what you're saying, they don't have as many semis running? I know they bought, what was it, 30,000 Rivian vehicles. And if you haven't seen, by the way, the Rivian vehicles, go on to MKBHD. He did a great job. Yeah, but Christian, I wouldn't worry about big tech because, and part of the reason why I don't worry about big tech refinancing debt, their cash flow could cover that debt. So if they decide, if the debt just goes away, meaning, say their 10-year bonds or their 5-year bonds mature and they want to issue more bonds, they can do that at 5, 6, 7%, whatever the current rate is that they want to charge for it. I think if I go over here to bonds and I go to, I should be able to buy a bond. Corporate, there we go. See, these are all corporate notes, new issue. Oh, and I've got to log in. I'm not going to log in. But there's ways to buy corporate bonds. And honestly, my thought process was, at some point in time, it becomes better to buy an Apple bond than it does a U.S. Treasury. I mean, just full disclosure, the U.S. Treasury, while it's 100% secure and safe, supposedly, 10 years from now, what do you know? I mean, that interest rate payment that we're looking at, while interest rates are at 4 and 5%, that's big. That makes sense, Brandon. That totally makes sense. I think Amazon actually starts their own shipping company at some point. The only reason they don't, I think the FTC would be all over them. And Christian, companies like Apple, Google, Amazon, even Netflix, while they do have debt, they don't need to reissue it. Ooh, that's a good point, John. I'm in on Shopify, and it's been playing with that $50 mark. It's at $47.57. I mean, it just broke through that $50 mark right there. I thought that was support at 48 right there. I put that down that as a possible, hey, you're at 9%. At this point, does it make sense to get out? I don't know. I mean, it's filled this gap all the way down. I mean, and it's gone beyond that. The next gap here is at 45. And it's still slightly expensive. November 1st. I mean, you could get, if we all of a sudden turn around the market in the next week or so. Okay, hold on 1 second. I'm going to go get my computer. think you pushed her out of bed. I think you pushed her out of bed, Penny. Okay, let's see. Oh, that got her up. We woke up the monsters. I couldn't find the dog. I couldn't find the dog. I couldn't find the dog. Let's put it over to MacBook Pro. Oh boy. Okay, I gotta go get ready for my housekeeper to come too. So I am gonna get out of here. I gotta restart this computer. I gotta take care of my finger, which looks horrible right now. Hoofa. Okay.